Okay, good morning everyone and welcome to another live session of Elliott Wave Forecast. Today session, what we're gonna do is we're gonna give you guys the bias that we see on the market and what we believe the market is gonna do in the short, mid, and in the short and the mid term in most of the instruments that we're covering. The structure of the session is as always. We're gonna give you first our idea. The most important thing that happened in the market over the last 20 or 12 hours. And then from there, we're going to do a round around the market for each individual instruments. And then at the end, we're going to answer some questions. We want to welcome everyone around the world. The very huge response. And ideally, the idea of this free seminar is to let everyone know around the world the partnership that we have created with FSCN, in which everyone can take advantage of the free membership that we offering through FSCN. When a trader with a minimum requirement can be part of Elliott Wave Forecast, get the Premium Plus membership, and then you can, the trader can get it for free, only trading 80 mini lot in a month period, or trading an equity, which is a standard lot. A standard lot is equal to 80 mini lots in a month, and FSCN is gonna credit everyone at the 10th of the following month for the account. Also, I want to mention that the promotion is only for the non-US clients, which means that US client, unfortunately, due to the US government regulation, cannot participate. We want to mention that to everyone, and also that we are providing, and we know that switching brokers is a process. We are providing a free, one free trial, so the members that opt in into that plan will be able to do the transfer without any cost or anything like that. It's very simple. All that everyone needs to do is you gotta visit the front page here of the site. You click on the promotion with FSCN right there, and then you need to follow those steps. It's a 7-day free trial. You can take it. During the 7 days, you need to transfer your account to FSCN. I want to also mention that any FSCN client is also available. It's not the best scenario in some degrees, but anybody that already have an FSCN client account can take advantage also of the promotion. The promotion is together with Elliott Wave Forecast, FSCN, and Bad Bay FX. So all you guys need to do is sign out there. You open an account with Elliott Wave Forecast, and then the next step is open an account. You follow the steps there. You open an account with FSCN. You gotta open an account with Elliott Wave Forecast. When you leave, and you create a recurring payment. At the end of the 7 days, your account's gonna be charged, and then at the end of the month, you're gonna be credited back in your FSCN account. All right. So anybody that has a question, you guys can send an email or contact us in Twitter. You guys can send an email at this address here. which is support at elliottwaveforecast.com. Or everybody has uh, our Twitter handle, most of you guys at Elliott Forecast. You can go here when you say contact us. You can go here when you say contact us, and you guys leave your information with your request right there, and someone for our side, they're gonna be contacting you guys. All right, so very clear. It's an offer when you guys can get the Premium Plus, which is cost $149 a month. You guys will be able to get it for free as far as you meet the tenant condition in the agreement, which is very simple. 40-minute lot or 4 standard lot is gonna give you half of the membership, $75. 80-minute lot or a standard lot is give you the full membership. What you're gonna be able to see is something that most of you guys has never seen. We are a very unique and very different service. Our clients, they 85-90% of the times, they are in the right side of the market. We are different to anybody that have you seen in this world doing Elliott Wave. We have an idea. We say Elliott Wave is a great principle. We don't deny that. Elliott Wave was created in the 1930s. And what we did was we took Elliott Wave to another level, a level when we adjust Elliott Wave to a new principle. When we always say in 1930, a car from the 1930 has nothing to do with a car in 2013. Well, we developed an Elliott Wave of 2013. It's completely different to what you guys used to see in social media or those levels of communication nowadays. It's a complete different Elliott Wave principle, and we are being credited for being called in the market the biggest turnaround. We always there in the right side of the market, and it's a system that we developed for years, and that works. It works pretty nice, 85-90% of the time. So we welcome every one of you guys to join us. This is a unique. If you don't want to switch, a broker or anything like that, you can always leave a message right there, and someone for our team is gonna contact you and trying to do some sort of promotion. So fill out information right there. Anybody that wanna join us or have any question, that's the way to communicate with us. Most effective one is right here on contacts in the front page of this of the site, and you guys can ask any type of question, and they will be answered. I mean, pretty fast to all you guys. All right. So let's start. Let's start with a live session here. 1 second. Let's start with a live session, and I want to tell you guys, we do this every day. I mean, this is not like today because, I mean, this is an everyday event for us. Our clients, they receive, our clients, they receive this twice a day. All right. So I want you guys to understand that. All right. So that's what I had to say in general. And let's start with this. First, I wanna show you guys the side from inside. First, we do 3 times a day, 2 times a day a Forex overview. When you guys are able to, we're gonna let you guys know our idea and our vision of what's gonna happen in the market. You receive a Forex box like a twice or 3 times a day when we pick a pair and we explain every possibility of the pair. Right? It's only the charge, but you also can get a test or whatever is explaining right there on the charge, right? Also, we got the technical update when you guys gonna see every instrument that we cover, explain it in with the BIOS and the Elliott Wave vision in every time frame. We got a series of educational videos when we explain a lot of things about Elliott Wave right there. Now, each day we do some sort of technical video when we explain what's gonna happen for the next day of trading. Not like we cover every single pair. What we do is that we explain the most important details of what instruments can be called in the market. Also, we got intraday videos that we do when something happen. We put like we did one right here saying that the dollar yen cycle is mature, and we got the Elliott Wave counts when you can see every single instruments that we cover in 1 hour. For example, uh, this is the euro dollar, and we put right there the euro dollar in every single time frames, and that's how it goes. We got the Elliott Wave counts when you got the weekly. Good morning, team. When we got the weekly, the daily, and the 4-hour charge. We got the trend report. We have nothing to do with Elliott Wave. This is nothing more than a mathematical system which is calling the trend of the market. All right. So technically, that's Elliott Wave from inside. Besides the interacting rooms and the interacting sessions that we do and the forums, which we do it every day at 10:45, and with that we do a seminar on Sundays when we forecast the next week of trading. All right. So let's start with the class right now. Now that you guys in some sort of introduction of things, now that you guys know who we are, because yeah, nobody see it from inside. I don't think it's nothing wrong to let you guys know who we are and how we proceed in the daily basis. All right. So let's start with the live session today, and I mean we're gonna start right here. Last week we told all you guys that the EBEX was calling the shot. In other words, the EBEX was the first instrument that over the last 10 or 12 days, we've been telling everyone that the risk on trade was very mature, that there was some Elliott Wave structures around the market that they were calling that some sort of risk off is going to happen in the market. And we've been telling our clients that they need to start getting ready because possible, and this stage is possible, the biggest correction in some indices in the middle of last year can be about to start, and also that in some instruments the biggest correction from October, November of 2011 also can start. We have the belief that this market can be entering into at least a 2 or 3 month periods of risk off, and we believe, and we've been telling clients to be ready for it. Now, we are a service when we always trade with a trend. We always trade with a trend. We are a trend-oriented service. That's why you guys see the trend report right there. All right? That's why you guys see the trend report right there. The trend report is going to guide everyone in every single time frame from 15 minutes to the weekly, what the green means to the upside and the red to the downside. Now, out of the whole risk instruments, the EBEX was the first one that turned lower. So the transaction into the risk off that we've been forecasting over the last 10 days is happening. And now, I mean, every single transaction like this, doesn't happen doesn't happen one day. It's a process. A turn like the one that is going to take place is a process that some instruments they're going to be leading. There is another instruments that they're going to be lagging, right? So here is this is the EBEX. The EBEX is an instrument that we follow with a great deal of, I mean, we follow with a great deal of with a great deal. Why? The EBEX always is unbelievable. Is most likely the less popular of the indices. The EBEX is the index for the Spain, for if anybody doesn't know that. But it has something within him that always guide the market. Now, that's the EBEX right there with the bar. Now, right here, this is the EBEX, right? So, this EBEX, if you notice right here, this is July 24. Nobody, most likely, most of the people don't know this, but July 24 also, if I put the dollar in or the euro right here, is the same day that the euro bottom. You don't have to be a genius to understand that this is the same structure that the EBEX is taking that the euro took. All right? So we told everyone last week the euro outside is completely limited at this stage. When we saw that the EBEX dropped like that, we knew that it was a matter of time that the euro is gonna, that the cycle is very mature. Now, what makes us different than the rest of the Elliott Wave for 1930? And he did a great discovery. The guy discovered something that we love, and we practice this every day. Unfortunately, when Elliott discovered Elliott Wave, he didn't have computers. We have computers. We adjust our system that we understand how this market works. And we use something that we call the market correlation. Now, if you have a correlation like that, when you see that one follow the other and the other follow the other, so if you know that the EBEX automatically here, the EBEX automatically here is turned lower here, is very simple. That is very simple, that you know that sooner or later this blue line is gonna turn lower. That's a matter of time. The blue line is gonna get over. That's something that Elliott probably didn't at that moment in 1930. He maybe didn't have the opportunity to see that many instruments that we do today. Now, another thing that we do different is we don't label the wave based in the market. We don't care about this. We go based in the secondary market, which we follow with the momentum. And then we label the cycles. We should divide the market in cycles. I'm going to get into details of that due to the fact that that's another, that takes a day or probably 3 days for me to explain it. But we don't label the market. For example, most of the waivers, and let's say 1, 2, 3, 4, and 5. And let's say as far as the wave 4 doesn't talk the peak of the wave 1, that's a 5-way move. We don't do it like that. We are different. We got rules that we develop. When wave 4 needs to have some sort of distance, if it passes that distance, that's not a 5 ways. That's F5 swings, which is a complete different scenario. But that's, like I said, that's topic for 2 days of big talking. So we use the market correlation. We should divide the market in groups, and those groups are those group those groups are correlated one to the other, right? So at this stage, the EBEX right here last week is telling me that the outside in the euro is limit, and that sooner or later, today, tomorrow, today, tomorrow, next week, is gonna be a turn, most likely, in in favor of the dollar. All right. So that's what the EBEX is telling us right here. Now, another one right here that is very interesting is we cover a series of instruments around the world. Indices, we got the UK, the DAX, the EBEX, the S&P, the Dow. We got others. Now, right there, that one in blue is the DAX. The DAX, like a EBEX, is doing is turning lower. And the DAX and the EBEX turning lower is you're starting to see the rolling over of the risk on to risk off. We've been forecasting this to the members over the last 2 weeks. We knew, and I'm going to explain to you guys later why we say that. Now, we know that the EBEX in our system, that remember, our system is not the market. We don't label based on the market. We label based in something that is deeper than the market. Now, our system is telling me that this cycle in the EBEX ended. Most likely, this cycle in the DAX ended. That means that at least they're going to do a 3 weeks back of risk off. If there is a 3 weeks back or risk off in the EBEX in that way, you should know right now what's going to happen next. That's going to be a domino effect when every single instrument or risk is going to sell. And that's what we are expecting. So now that we know how the middle picture of the market looks like, and another thing that we do different than the rest of the people is that we create something is called inflation areas. Inflation areas is the market is subdivided in cycles. When a cycle ends, the opposite move is going to go to the inflation areas of the previous cycles. In this case, for example, that cycle that ended in the EBEX right here, it has an inflation area around this area right here. So the EBEX is going to get into that area. Now, how we get there is the idea. Now, you say, okay, it's going to get to 80, to that area comes around, I believe, 77,000. You say it's going to go to 7,000. Now, remember, in math, how you get to 4 doesn't matter if it is 2 times 2 or 1 times 3. At the end is 4, right? So that's something that our clients always have. We told our clients when the euro was at 121, we say it's going to go to 127. Then we say it's going to go to 134. Then we say it's going to go to 140. But we don't say it's going to go to 127 when the euro is at 126 and a half. We say it's going to go to 127 when the euro was at 127 or 121. We say in the euro yen when it was at 104, it's going to go to 130. And that's something that they receive when we update. That's something that we say to them, and we update it in this report that you guys see here. That has nothing to do with Elliott Wave, this is all math, cycles, and pivot levels, but not the pivot levels that you see in the market. This is completely different. We create this system. This system is 85-90% accurate. So we told everyone that the euro yen is going to go to 130, but not today that is almost 130. We told you guys that is to 130 when the euro yen was a 104, 105, 110. So that's how we do it, right? So now let's see the EBEX, knowing that the BEX and the DAX are leading the risk off. We're gonna go and we're gonna say how it's dropping. For that, you're gonna go here and you're gonna put the 60-minute chart, and then you're gonna get, and you're gonna put the EBEX. You took the DAX off, and you put right there this. Now, it's an impulse, no question about it. It's an impulse. Now, is the impulse done? Well, that's when your friend the RSI is coming around. As of right now, I would tend to believe that maybe it's not done, that what it did was a 1, a 2, a 3, a 4, and a 5. Now, after this drop in the EBEX, remember, this is the EBEX. Let me put the 1 hour chart right here. After this cycle in the EBEX is completed, that's what our client are receiving this morning in the update. After that cycle is completed, what's going to happen? The EBEX is going to bounce. So you, as a waiver or as a trader, you cannot trade an insulated instrument. Most of the traders say, okay, I'm going to trade the euro dollar. That's my pair. I love the euro. You're wrong. Completely wrong. This is an overall market that the deepest you get into it, you understand that the market runs in cycles that should divide in two big groups: risk on, risk off. Now, not everyone takes the same route. In other words, I mean, you can have a EBEX doing an impulse, and maybe the euro is dropping in the double correction. At the end, both are dropping in risk off, but the path is different. Doesn't matter. We in Elliott Wave, the first things we do in the morning is taking and like this. What we expect into the market today: risk off, risk on. We told all the client last night, we believe that the favored path is risk off tomorrow. A risk off that can take it into a double correction in risk off. And then from there, we're going to see a bounce. That's what we told the client last night. So they know in their mind that it's going to sell today and there's going to be risk off. It's very easy doing making money if you follow those charts and also you follow the trend report. For example, if you take a look at the euro, which is very popular for you guys, we got a target that say 33.52. That's the target that we have in the euro. So our client knows that they cannot buy the euro until it doesn't get to that inflation area. That number, we don't make that number out. That number goes because it's a mathematical number, which is the next extension to the outside. Now, this is how it is right now. This is the EBEX. The EBEX is in this cycle over here. Now, if you put the euro out, the euro is kind of lagging, but that lagging is gonna end it sooner or later. Now, you know that the EBEX is gonna take the euro lower sooner or later. We know that. We know in Elliott Wave forecast that that's going to happen. That's what we told the clients. Now, you need to find the path. And the path, if you look at here, is for the EBEX, what's coming after 5 weeks? It should come a recovery. Now, what is the recovery means? The recovery means that the EBEX trade higher. That is risk on. And that if it's risk on, you need to ask yourself, this is the best time to sell the euro? Well, in our system, the euro is bullish from daily to 1 hour, and it's bearish in the weekly and the 15-minute time frame. Now, the way that we're telling clients to do it is wait for 33.52. 33.52 can be when the EBEX ended this cycle here, and then you buy the recovering, and you wait to see where the recovery in the risk on and the EBEX is gonna take the euro, maybe to another high or maybe into a big way. Nobody knows 100%. But as far as you follow these steps, I mean, you're gonna be in good hands and you're gonna be okay. So what we are expecting overall is a risk off. That I don't think that correction or the first leg of the next move down and risk off has ended, and then a recovery and risk. That if you ask me where are you gonna sell euro, I say very simple. After the EBEX ended this cycle and makes 3 ways back, in the top of that B way right there, you need to sell euro. You need to buy the dollar in the top of that B way of the EBEX. You ask me why? Because I tell you this, 5 ways against the previous trend, it guarantees you another leg down in extension. And that means that by this top of the B way is when the move and risk off is gonna take place. We got no doubt about that. And that's what we are presenting. That's what we are presenting to the members. Now, there is another, this is overall risk on, risk off. Now, there is another dynamic that we have in this market. That dynamic comes here in the dollar index. The dollar index, as you guys know, is a basket of pairs or currencies, better say, when there are balances out, that every currency have a percent. Now, the index, the biggest contribution to the index is the euro. Now, what happens is that usually with times you put the charge of the euro is the same charge of the index. Well, since November 14 low, which is this low over here, they don't have the same Elliott Wave structure. Why? It's because the yen is being so weak, and because the yen is around 12, 11, correct me if I'm wrong, percent of the index, that makes a disbalance of the wave structure. Also, the pound has been very weak and is trading also with the index, which means that you got about 20-something% between the pounds and the yen, that they are disbalanced in some degrees the strength of the euros. All right. So, having said that, what do you have right there in the dollar index? It's very simple, guys. You got I'm going to put the euro here. The market correlation is huge. We do market correlation every day. We see traders that's unbelievable, but they go and they are bearish the Aussie dollar, for example, and then they are bullish the euro. It cannot be like that, because even though Aussie is not part of the dollar index, Aussie bearish is risk off. You see what's happening with cable? That doesn't happen very often in the market. And remember, trading is a percent gain after all. You gotta create a system when your percent perform at the higher levels. So, speaking of that, what I mean is as follow. That's what we were done for 10 years, creating a system that is constant. We don't change. We go like only one line. We got a 10-player system. We put it on the market and we go for it. We label our own charts. We don't use computers to do it. So that's why we are right 85, 90% of the time. Because it's like that. You don't have to be a genius. This is all math. If you want to be a successful trader, you don't know nothing. Okay, the first things, you get rid of all the indicators. We don't use indicators. We don't use fundamental news. We don't listen to anything like that. I'm going to put it simple to you guys. You go every day at 8 in the morning. You say, I'm going to either buy or sell the euro. And then you say, I'm going to look on the window of my house. If I see a red car passing first at 8 in the morning, I'm going to buy the euro. If I see a blue, I'm going to sell it. If I see a yellow, I will stay flat. This is what happened. Out of 10 cars, and you're always going to sell or buy with a 50p target, 25p stop loss, 2-to-1 ratio. What's going to happen is that at that moment on, you are putting the math in place in your trade. And because it's all the two sides, buy or sell, you're going to be right at the end of the month. You're going to make money because you have a system in place. Well, we do that more deeper with the new Elliott Wave, when we don't label a wave 4 if it passed 38 or 2. When for us the equal X needs to be to some level, and ABC doesn't pass 1.618. We don't do those type of things. That's the big difference between us and the rest of the persons. Now, right there you have the dollar and the euro. What is the difference there? Technically, up to here, same structure. You see, the bottom on the same day, secondary top, bottom on the same date, same days. Here is when things starting to get different due to the dollar yen move. That's the one that create the big difference there. Now, what do you have after that? I can tell you, and we've been telling the clients, that due to the difference between the structures, it makes it a little harder. But one thing that is for sure, in a double correction, you got 1, 2, 3, 4, 5, 6, 7 cycles. We count the cycles. And for example, a three-way, a correction runs in 3, 7, 11. You cannot label a correction with 9 swings or 9 cycles. A correction runs different. It's a 3, 7, 11. The imports runs 5, 9, 13. Now, in a double correction, technically, what's happening is that you need 7 or 11 swings. All right? Now, the dollar right here, I want to ask you guys, how many swings do you guys see over here from this top? And then you need to subdivide the cycles. From this top, look at the euro in red. You got 1, 2, 3, 4. A, B, C, W, S. Now, from here is the big F. Now, when you got a double correction like this, this A needs to drop below the beginning of the end of the W in order to be a cycle. All right? So, at the end, that's the way that should happen. Now, the big question in the market right now is this the 6, 7, and 8, and sorry, the 5, the 6, and the 7 cycle, is the euro down? Well, the euro won't give you that answer. The euro can be down at the top. The euro doesn't stop here because any news out of Europe. The euro stopped there. Our uh, our clients knew at that moment that that was the level around 36.50 when the euro came down lower. That was our target in the 4 hour forever. And I'm gonna explain. I'm gonna tell you guys why. Now, right there, if you measure these two cycles, they are equal right there. That's the first target of a double correction when W equal Y. So don't get into that thing that Euro is being the same forever. It's the same euro now that it was in 2010, on 2008. This is all technical market. Now, the question is, if this, the 5, the 6, or the 7, or this is just a cycle. The euro is not giving you that answer. The dollar, it has 1, 2, 3, 4, 5. How many swing do you guys see from here? 5 or 7? Please, you guys can answer right there. How many swing do you guys see here? 5 or 7? It's a 5, right? Now, if it's a 5, it's not completed. But the dollar, I mean, I'm going to put it to you guys like this. The dollar is iffy. I like it as a 5 and we're labeling as a 5. The dollar is easy. It's confusing. Now, I'm going to put, because this big swing right here, even though it didn't break this low, so for me it's a 5. Now, that means that the euro is in this one. Most likely it's going to go to 33.50 and make the last swing before a big decline in the euro. Now, I'm going to have you something that is more clear than the euro, than the dollar. This is the dollar sweeps. Look, I'm going to do something for you guys today that we did for the client yesterday. This is the dollar sweeps, and I'm going to put to you guys the 480 bar right there. We use a lot the 480 bar due to the fact that is just the 8-hour bar should divide them, besides the Fibonacci number, it should divide, it's my birthday, it should divide the market in 3 sessions: European, Asia, and New York. So this is the sweeps and the euro. I want you guys to look at it. Same day that the euro, the sweeps top, the euro bottom. Same date, same date, same date. Every significant top and bottom is a copycat one of the other. Now, this is how it works. This is how it works. If you do the Fibonacci time and you see how many bars you have from here up to here today, there is a grand total. Sorry, let me do it right. Until today, there is a grand total of 479 bars of 8 hours. You guys want to know how many of them that correlation there hasn't been 100%? Anybody guess? Only right here in this little step. Let me see, right here. Yeah, from this level onto this level. When both the euro and the Swiss, they trade to the outside. That was about 3 or 4 weeks ago when the Swiss National Bank, they did something right there and they raised the euro Swiss, right? So Out of 479 bars, only 15, the euro and the Swiss, they hasn't trade in a 100% correlation. What it's telling you is a 97% correlation. Now, how many swings do you guys see in the blue one right here from this top? 1, 2, 3, 4, 5. Yes or no? Everybody see it? Now, there is nothing like the dollar that have the, no, this is clear. 1, 2, 3, 4, 5. So that's your answer. That's your answer there. We say that the euro most likely from 33.50 to 133 should either test the high or make another extension higher. That's what we are forecasting the market. Now you guys can see what we are different than the rest of the servers. Now, someone mentioned to me there, that this is a nest. No, it's not a nest. It is a nest. Another thing that we are different is that we use the RSI to code the cycles. In other words, we developed a 13 rules RSI rules when the RSI is calling us the cycle, and we follow that, and we label based in the RSI knowing the market. In the nest, to draw you right here, this bottom of the RSI cannot invalidate the bottom of the market. So this is not a nest. This is not a nest. This is a double correction. All right. So bringing you guys know what we are expecting. We are seeing in the short time frame, this is the euro and the US dollar, and we believe that we told the clients sometimes the beginning of this week on Sunday, that this is the inflation area in the dollar here. When the machines, they're gonna start selling it, most likely. And the euro is gonna go to this area, most likely when the machines, they're gonna start buying, either to break the high or either to make another extension. All depends of the EBEX, how deep of the B wave is gonna be. Now, when the EBEX gets to this B wave right here in the EBEX, then the dollar index and consequently the euro, let me clean out the chart a little bit here. Either the dollar is gonna be here and turn lower, the dollar is gonna make this move right here, or the dollar gonna go to the 78.40 target that we have right here, and then it should turn higher from there. The euro from here, it should either do this and lower or turn lower. Nobody knows exactly because the euro is very mature. The Swiss is telling me that it's gonna break the high. All right, so that's what we've been telling the clients that we are expecting. Another one that is very interesting, and this is the recap. Now we're gonna go over the pairs, are the yen pairs. We told everyone yesterday, we did a video. This is the dollar yen. We've been right on the money with this pair and with the yen group. We've been very bearish the yen, bullish the yen pairs. The yen is breaking cycles for over 10 years ago, for you guys to know. Don't even try to believe that the yen is gonna get strong. The yen is gonna do a correction most likely soon, and it's gonna get some strength. But I want all you guys to look at the strength in the yen as an opportunity, most likely, of your life to sell the yen. I want you guys to think about it, right? So that's the dollar yen right there. The dollar yen comes from this low, and I still see in the RSI right here, I still see it. One cycle, two cycle, three cycle. I see it, another cycle, and then another one, and I'm gonna get deeper into now in a second. Another one, and this one. Now, if you put the corrections, you got a grand total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. 13 cycles makes an impulse, meaning that that's very mature. We did a video for FSCN about 10 days, I don't know. Chris, if you, or Daoud, you guys, you can correct me, about 7 days ago, maybe, saying that the cycle is mature. Now, the trend is very powerful. That's why you see this Elliott Wave structure over here. Now, so far, it's good. In the 5-way structure, you need to see divergency, 3 divergency, no one. That's a mistake that people make. No one divergency. You need to see 3 divergency. Now, the 3 divergency that you need to see can be seen over here in this RSI. The first one, you're gonna get the wave 3 extended right here. The first divergence that you're gonna get is the divergence of the wave 3 himself. Then you're gonna see the divergence of the wave 5 himself. And then you're gonna see the divergence of the 5 against the 3. Now you can see it all right here. You can see the divergence of the wave 3 right here. You can see the divergence of the wave 5 right here. And you can see the divergence of the 5 against the 3. So this cycle is very mature. All right? So what we're telling you guys, the guys, is until you don't see in this mature cycle 5 weeks, you cannot sell it. Now, another thing that we told the guys is this trend line right here. When that trend line is broken, this cycle ended. I tend to believe that it's a subdivision of 11 swing. We got 1, 2, 3, 4, 5, 6, 7, 8, 9. We are in the 10 and 11. Daoud, if you can post it in Twitter and say that this is what we are referring in the webinar. So we believe that we see right here this peak, a break of this level in the RSI is gonna cause the cycle, and then the yen is gonna drop. Now, if you go to the daily charts right here, it's when it gets very interesting. Why? Because from the lows right here, this is very strong. This looks like a wave 3. We're telling the clients that we got 2 routes right there. That we have 2 routes right now. Either this is a nest, 1, 2, 1, 2, and we are in the wave 3 of 3, and then the drop is gonna be relative to around the previous 489 before keep going higher. Or this is a flat 3, 3, and 5. Now the RSI is supporting both ideas. You see how this peak is higher than this one? It's supporting both ideas. So you gotta take it as it is, but you know that either in the 4 and the 5, or either in the flat with the big wave coming in around 84, is a lifetime opportunity to buy the dollar yen. I can tell you guys, it's a lifetime opportunity to buy the dollar yen. All right, so That's the dollar yen. And consequently, the whole yen group is in the same stage. I want to show you also something about the S&P. And then our clients, sorry for the repetition. I mean, most of you guys, I know you guys there, but I have to give you the whole idea because anyway, they won't get it if I go, like, I mean, we are a little extended here because with the clients, we go straight to the point. S&P, from the same days that the dollar yen bottom, has done from here, 1, 2, 3, 4, 5, 6, 7. We are very bullish in the S&P. We believe that we are very bullish in the monthly chart. They're saying that we are bullish risk, guys. Listen, bears in these markets are losers. You can tell them that I say that. They are losers. Anybody with a bear buyers is a loser in this market. The human nature is bullish by nature. We live, like I always say, we live in the wood in the 1500s. In the last, I don't know how many centuries. Now we have houses with air conditions. Everything is our trend. So any crisis, anything that happened in the human society is an opportunity to buy. That's the first mentality that a professional trader should have, knowing your life trend. Right? People are in the social media overall. They've been manipulated by the big smart money of this market, telling you guys that, oh, the market is gonna crash, oh, the market is gonna do this, oh, the market is gonna do that. No, we are bullish. You have to look at every dip as an opportunity to buy. 2009 was a huge opportunity to buy. I want you guys to have that set of mind. Everyone that is a bear is a loser, is in the wrong side of the market. I can tell you that with no issue. The media just want you to be in the wrong side of the market. That's why in Elliott Wave Forecast, we preach. Don't listen to news. Don't care about the media. Don't care about it. This is a technical market. I can justify right here, everything go high and low has a technical reason to be. Doesn't matter. We told our clients right here, I told our clients here to sell the S&P and the buying at the 1370 area with the target of 1500. We told everyone. Nobody believed us. We were right. Everyone was calling this a five-way move in the S&P. Somebody asked me at the beginning, what are the difference is that maybe Elliott in last century have called this a five-way advance. We say it's not a five, it's a five swings. And we prove right. Now we got 7, which is different. 1, 2, 3, 4, 5, 6, 7. This should end pretty soon, and it should correct to these areas. Unless it's gonna correct. It's gonna stand. It can stand, don't get me wrong. But it's gonna correct sooner, later, today, tomorrow. It's gonna do a deep correction. That's why thinking that the dollar yen, let me clean the chart a little bit, I'm sorry. Let me clean the chart so you guys don't get confused. That's why we believe that the S&P should top or correct between 1527, maybe the top is in, it hasn't shown it yet, 1527, 1600, we should either this scenario, if it's gonna do a triple correction, but we don't labor, so we don't push for that. It's gonna correct to around these areas, from where should have another leg higher. That's, if you look, I can leave the same chart for the dollar yen. When this cycle ended from October of 2011, it's gonna correct in 3 weeks and put back. So very simple. S&P on the weekly, and I want you guys to answer your own question right there. This is the 2009. We were one of the few surveys that say that the S&P was bullish when it break the inflation area. When he brought the inflation area right here, we knew that most likely it's gonna trade higher. Now, how many swing do you guys see in the S&P from here? How many? Honestly. Anybody guess? From here. I see 5. I see 1, 2, 3, 4, and 5. Don't you guys agree with that? Now, this is very simple. He should do a 6 and a 7, and then end the move from 2009, and then the big correction should come in the market before another rally higher or something. The thing is that we don't fall in love with a count in Elliott Wave. We don't fall in love with the count. We follow a combination of the trend report, which is what the momentum and the math is telling us, and then the Elliott Wave is part of the system. It's not like it's the end of the world, the Elliott Wave part of the system. All right? So we are expecting a mid-10 correction in the market and a push higher. All right? Now, I want to keep going. What else I have overall? I want to talk here about the Aussie dollar. The Aussie dollar is dropping. We are bearish in the daily. We are bearish in the daily in the Aussie. But we see 1, 2, 3, 4, 5. We told the clients last week that the idea that the market here did this marginal low, it was bearish. Exactly what happened. Now, if you put the RSI in Aussie, the divergence was erased right here. So this is not a 5-way move anymore. Let me put the bars. This is not a 5-way move. I believe it did either A, B, C, and then it can be done. This can be either a triangle, a bearish triangle, and it's gonna do this of the Aussie is gonna hit right here the equal legs around 102.70, and it's gonna bounce from there. But this cycle already, I can see 1, 2, 3, 4, 5, 6, and 7. Anyway, it's in the RSI. You don't have to be a genius to see it. 1, 2, 3, 4, the 5, the 6, and the 7. So it's very mature. I think that it's gonna be a bounce in Aussie, and the area around this previous B wave 104.75 is gonna represent a very good selling opportunity. All right. So now that I give you guys our view, the most important things overall, guys, is that if you're gonna buy risk either into the 7 swing of the dollar or into a test of the highest. If you want to buy risk, you gotta wait for the EBEX right here to finish this cycle, and then the risk bounce is coming. All right, now let's do a round around the market. We got an hour still. We're gonna start with the 10 years bond. Everybody's, or you guys know how important this instrument is for us, and the 10 years are consolidating right here, which if you overlay the 10 years with the dollar and the EBEX, most of you guys will be surprised. Look, let me change the color of one of them. Look, EBEX bottom is the same market, guys. So right here, the idea that both right here, the EBEX needs to do either this and this or this, it makes very vulnerable right here that the bonds is gonna hit the 213 target that we have in the trend report. If you look at it, 216, 214 target before it create a top in that degree. All right, so I think that one more leg higher, also supporting the idea that one more leg in the dollar lower is gonna represent the end of the cycle. So we are expecting the dollar to get strong after the next low. We are expecting the bonds to be sore after the next high. Now, Cooper, it looks like it ended the cycle already that we've been calling. It was very popular. A lot of our guys tweeted a lot. It did a 1, 2, 3 connector, 1, 2, 3 to the equal legs, I believe. It didn't reach it, but it reached the minimum, which is the 618, but it closed the cycle maybe at the 1.226 of the Y, so that's another way that I can close it. Now, for the moment, the next buying in Cooper, it comes around 369, 367 area. All right? Any question when I'm presenting the instruments? Any question that you guys have, they are working and we are here to answer. Now, we're gonna keep going lower here. We're gonna do the DAX. We told everyone the count yesterday. It's working perfectly. We believe that maybe wave 3 ended. 1, 2, 1, 2 in the nest. And you gotta look at your RSI. I mean, you only have one divergency, which is telling me that most likely what we ended is most likely what we ended is wave 3 of the move. If you look at the RSI, the nest is justified. And the next low, after a correction here, the next low should represent the end of the cycle. And this is what the clients are getting this morning. And they're gonna get a correction, which we believe that you guys should sell it. We believe that you guys should sell it after the 3 weeks back. That's the DAX. Now the downs, let's see what it's doing today. It's very mature, I can tell you that. I mean, the down is very mature right there. And maybe, I mean, there is enough swing and wave over here to do the laboring. The RSI, it looks very, very mature. If you look at it, it looks very mature, but this cycle is still alive. At any moment, it's gonna drop. The next level to the outside now is 1406, 14200. So maybe it's gonna do a triangle here. Is word supported in the RSI, but we are expecting a drop in the down at any moment also. By having an EBEX still bullish, in other words, expecting a 3 weeks of risk on coming from the EBEX, what's gonna happen is that uh, what's gonna happen is that I still see possible a little more outside if it's lagging at this stage. But it's gonna top very soon. The UK index or the FTSE is been following our chart. It did 3 ways from the highs, but it break the cycle here. So we are expecting lower in a corrective move. The idea that is corrective here and not showing 5 ways also is in some degree supporting the idea that we have that is gonna drop to around this area before another rally. And I want you guys to understand, we do this for members every day in London and every day in the New York session. Now, oil, I'm gonna cover everything, guys. Don't ask me, I'm gonna cover everything, every single instrument. Oil, this cycle, we call it perfectly. But that cycle is over. Now oil, it has a target of this inflation area 91.90 before any possible bounce. So don't buy the oil. It's showing 1, 2, 3, 4, 5. We recommend selling it against the high over here of 98. Then we got the S&P is the same as the S&P is the same as the Dow. It makes a marginal new high here yesterday, and we believe that it has another rally to the outside to the 1527 area more or less. We believe that it has 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, and now we are in the last stage before the top is forming, and then the S&P is gonna drop like this before going. It should drop very strong, to be honest with you. And then we got the dollar. Now let's go to the Forex instruments. We developed a system, and we would like to share it with all you guys. I mean, of course, this is a live seminar. I mean, of course, it's due to the promotion that we have with FSCN, and we would like all you guys. I mean, of course, we're selling the service. That's, I mean, I cannot deny that. I mean, we're trying to convert you guys to be members of Elliott Wave Forecast, but we're selling something that is very accurate, very good. Like I say, we followed. A system. It takes about 2 minutes to switch. Like I say, to switch to the 40 charts. And like I say, we follow a system which is it's a template that we are not pretend to be right 100%, but we are right 85-90%, which is in this market, that's good enough. So we would like you guys to take the opportunity either with the FSCM promotion. If you guys don't want to change, contact us. Uh, like I said, you asked me about the trades. This is the performance. We don't send trades every day. And honest with that, we are swing traders persons, but we are very profitable. That's the bottom line, James. If you look at it, that's the performance right here. Right now, we got a short dollar switch position along New Zealand. We don't serve, we don't send trades. We send trades every day. If you follow the charge and you follow the trend report, and we give you a lot of trading ideas in the live session. We give you a lot of trading idea in the live sessions. Like I say, we are not a trading system service. We send trades. But put in this way, 4,000 and something picks in 2 years, if you have a $10 account, James, and you trade with a 2% equity, you make about 80% of your money. That's pretty good. There is a misbelief that people want to pay everything in your house with a $1,000 account. Doesn't work like that. This is a professional service. We are no cowboys that we want to call every single swings. We are professional service, and we let you guys know today, so there is no misunderstanding. Now we're gonna start with a round of the market. This is the pound switch. This is gonna be more Forex now. We give you because James, we teach you how to fish. We teach you how to fish. We teach you how to fish. We say, and you're gonna love it if you enjoying it. You say this cycle's over most likely in the pound swings, and now most likely is doing a flat or a triangle. The trend is lower with the target at 140.15, and we teach you that you put your stochastic RSI and we put it right here. I say every time that you get it on the high on the side, that's a very good. If I give you a man a fish a day for a day, it's better to teach you how to fish, and you can fish for the rest of your life. I mean, we are not, and we're never gonna be a service that our first priority is send you guys trades. All right, we want you to be a professional trader, and we send you trades, but know that you depend to us for us to make money. You can read. We teach you how to read the charts and sell it or buy it yourself also. You see, that's part of everything. Now, this is the pound swings. We are bearish. We like to sell in every 3 ways back. Maybe we're doing a flat right here. In the short time frame, it did 5 ways coming from here. After 3 and 3, we believe that it's possible that it get to the inflation area when, and this is every day, James, when you should sell it here. I mean, that's what we say every day. So that's what we like in pound swings, is selling every bounce. We are not one of those services that they say, we are not one of those servers that they say that they make 900 picks in a month. That's not true. They are manipulating you there. We tell you that the way it is. That's the way we are. Now, New Zealand, we like buying New Zealand. We send the trade, which is buying New Zealand in this inflation area. Against this low. It doesn't make sense if you want to trade every single swing of the market for you, my friend. for us makes the whole sense in the world. If you know how to read the chart and you know how to trade, I'm not here to make. I'm here to teach you how to make money and make you money. And there is no correct charge right there for you to make money. I don't know, man. There is 500 people that love it around the world. Maybe it's not suitable for you. That's the bottom line. Now, right here, will I buy in New Zealand over here with the target at 81? Because we give you trades, James. Look, if I say to you right here, live recording, and I say buy New Zealand around 83.80, 83.55 with a stop at 82.71 with the target at 81, 85.81. What do you need for me to send you a printing of the trade if I explain it to you the trade live? You got it now? It's the same, my friend. Don't you understand? It's the same. This is more professional to send you a trade. Or say in Twitter after the fact. So that's what we like in New Zealand. Around the equal legs over here, New Zealand should drop. And the reason why we don't send many trades is because during 7 years, we have found that clients, they have a bunch of bad habits, which they don't control himself. They open the stop and they over leverage, and we want you to read the market and be professional, and then it's an overall thing. So New Zealand, you understand it now. That's what I love you. Right here, this trend line, I see from the lows 1, 2, 3, 4, 5 swings. We like to buy into the 7 here, looking for 81, 85. We got that trade, James, in the service. That's a trade that we send it in the service. All right, guys, so this is what we like in New Zealand. After here, should sell. I'm giving you now 2 trades. I give you buy here and selling here. What about that? In 5 minutes. You see? Now, let's keep going. The cat trade inverse to New Zealand. So if New Zealand is going to have a round lower, the cat most likely is going to get to the 98.80. The cat ended this cycle already. So it's in a connector. Most likely either it's going to do a bearish triangle and go here in 3 weight before going higher. All right, guys, and let's do something that is, I don't know, a lot of people right there. When you got a question, wait for me to cover that pair and ask me all the questions about the pair. That way it's going to be more fluent right there. And the cat, we telling you, don't preach, don't rush the loans. I recommended to you guys buying around 98.80 area with a stop at 98.12 right here, looking higher in the cat to around 102. Now the yen, we explained the yen. This is what we are showing the clients today. I believe that the yen, it has 1, 2, 3, a correction, 1, 2, 3, a correction, 1, 2, and this top right here can make it. It looks like an ending diagonal, or the diagonal, better say. And like I said yesterday, this is the higher rate. This is the higher rate. The next leg over here should not break this high and not even try to break this high. So you trace a trend line here. This test should produce the next bound, and in this trend line, the market should drop. That's what we like about the dollar yen. Now, you want to do an intraday trade, chasing the last trade of the cycle, which I don't recommend it, is buying here the trend line with a stop over here, looking higher. I don't recommend it. I would rather wait for 5 waves coming here and sell the 3 bags with the open limit. You see, James, how many trades I have told you in 10 minutes? That's how we are. I'm telling you, I'm showing you how to fish, no the other way around. Everyone is a winner in Twitter, don't you know that? Now, right here, this is the Aussie yen. The Aussie yen, we believe if the dollar yen is going to make another high, most likely the Aussie yen can be in the same scenario. Consequently, we believe that another swing can come. There is an alternative when this is a flat, but I think that the test of the trend line can produce the final swing higher. Now we got the Euro Aussie. Very interesting market. We are very bullish this pair, and it needs to be seen if it's gonna do this drop. I recommend it to you guys. Every dip in this market is a buy against this low right here, 23.55. But it better wait lower before going higher. Well, Aussie, we cover Aussie. Like I say, it looks like this is the 90-minute, but the 60-minute charge already, I believe, erased the divergence here. So it's not a 5 ways anymore. It's either this is your connector right here. You can see 1, 2, 3. You can see the 7 swing. If it's a triangle here, it's gonna make a recover and another low to around. If it's a triangle, it's gonna make another dip after a recovery to around 102 from where it should put back. But I believe that the downtrend has begun in Aussie. This is our view on the daily Aussie. And we're expecting this decline. So let's see if I started already. The alternative view was that we're showing you guys. Let me show you on the side. It should be on the side. Wait. You see, I believe, what is it? Is this one? That was just to the 4 hour, but now is that the X is already in place and the decline has started down. Now let's keep going. This is Gore. We like Gore Shore. Not really, because Aussie Home is gonna make a recovery. You see what I mean? It's not in a straight line. Aussie is either ending a 7 swing with a boom, a move higher to come. That's the one. Remember, all you need in New Zealand is one last swing. You see what I mean? You understand? All right. So Gore, this is Gore. We like to selling around 1720. We are waiting for the 15-minute trend is bullish, looking for 1720 to trade lower. Cable, like I say, cable is unbelievable. Uh, Cable is unbelievable. Is trading together with the dollar. Now, from here, all you have, this is a cycle. This is a five-way cycle, no doubt about it. This is this is a five-way cycle. I got no doubt in my mind. This is a three. So being this a three, you got two choices, or three, better say. It's either uh, a flat, three, gonna go to 156 and go higher and explode next week. That's one scenario. Another scenario is that because this is a 5, whatever that comes from here needs to be a 5. That is ending a 1, 2, 3, 4, and a 5 diagonal. Or it's going to do a running triangle, which I don't like it. We're showing both scenarios. Now, they're asking me about the daily view. We are bullish cable. People are making a huge deal in Twitter about this trend line. Honestly, for us, doesn't mean nothing. For us, doesn't mean nothing. It has two choices. This is our weekly view in cable. We are bullish. We believe that it's going to go to 178 one way or the other. We believe that all this is just dance right here. And it has two choices. Either it's a flat from here, from September, 3, 3, and 5, and it's going to go there. Or this is all dance, and we are finishing. We are still within the B way here, and then it's going to do a pullback, another leg lower. Our clients, they know both scenarios, but we believe that this is the routing cycle. This is not a triangle, and that sooner or later is going to go to 178. Now, Norwegian, we like selling Norwegian around the inflation area, which is the previous B way here. Around this area, we like selling Norwegian to another extension lower. Norwegian is another one that if you take a look at it, let me see, sometimes I lost the many charts. Okay, let me put the 4-hour chart. You're gonna see the same scenario of the weeks. From here, which is this, how many swing do you guys see? Because I see 1, 2, 3. I see 3, a flat. This is a 5. This high is higher than this one. So this is the connector and another swing. We believe that New Zealand is going to do the next low. Clients or us, they understand the double correction fever relationship and the idea that this low is the 618 of this lead, also supporting the idea of another extension lower. Everybody see that, right? So that's the view in the Norwegian crown. The euro yen, we believe that it has another leg higher. 1, 2, 1, 2, 3 connector like this. So buying in the trend line around here, 125 more or less, looking for 130, it can be a good trade. Only a take of this level, open the downside. The euro pound is very bullish. A connector is the one that put together two cycles. This is what we call a connector. This is the connector. Michael. Guys, with us, you guys learn Elliott Wave. I guarantee you that. You guys learn how to be professional traders. No. Have you seen any indicator there? Other than that, the RSI? We don't use indicators other than the RSI and the stochastic RSI to identify the points. We don't use MACD, anything like that. Only to identify the points to the trend continuation in the time frame. That's it. So I like buying the euro pound on the dip. This is very bullish, and we like buying the first buy at 84, 82 area, which is the 1.236 of the first leg over here. All right. The alternative of the Aussie yen is the imports, which is the same of all the yen pairs. Is the same of all the yen pairs, which is that as far as the connector is in place, which is this one, everybody should buy the trend line for the last push rally right here. But it's a very mature cycle. The dollar Swiss, it did it did 3 cycles of the lows. We like selling around this area against this high. That's what we like. All right? We like selling around that area against that high in the Swiss. You see how many trades, James? The euro dollar, we gotta go with looking for the 33.45 area. It did 3 ways off the lows. It is bullish. This is a 3-way move. Another 3. The next buying area is 133.50, 132.86. Everybody should buy the euro here. With a stop around 132. Looking for whatever, the test of the highs or higher. In the idea world now, it should follow this part. Should 34.45 should produce a bounce and lower. All right. So it did what it looks to be in the small time frames. 5 ways from the highs. 1, 2, 3, 4, and a 5. It did 5 ways there. You can see it here. So only a B wave flat, 3, and then 3, 3, and 5 can give you another extension higher. Now you need to wait for the inflection area of this cycle, which is entering right now before any lower. These 5 ways here. That's why we are favoring the downside. Why no? Because we follow a system, my friend. And our system say that this cycle ended. Our system say that this cycle ended, and that's the next buy right there. We wait for the level right there. You understand it now? When with all two things gonna happen to you. Either you, if the market left without you, but or the market, but you 90% of the times you are in the right side of the market. We don't trade against the trend. KH, I don't know your name. That's all your initial. We don't trade against the trend until we got a trend report in the euro, which is bullish. So mathematically and cycles wide, the euro is bullish all around. And then we wait for the 15-minute trend right here to finish the three-way move before buying. We don't trade against the trend. That decision is up to you. We don't recommend it to members, but if they want to take it, they can take it. The charge is going to be right 85%. You see what I mean? We don't follow. We don't follow fundamental news. I don't know which stimulus you're talking about. It, to be honest with you, we don't follow fundamental news, my friend. I'm sorry. That's the way we are. We all technical. All technical. For us, the fundamental, the fundamental. I used to run it, James. To be honest with you, for your knowledge, I used to run a fund. So, like I say, uh, because honestly, also I made more money than running that fund. To be honest with you, with Elliott Wave Forecast. So we got a great membership. So we don't recommend selling it. Even should go there. But it's up to you guys. If you're gonna sell it, enter into there. You're gonna sell against this place. All right. That's the invalidation to the downside right there. Now, the gold charge. Let me see where we stand. I don't want to mix anything. And then silver. I mean, silver. We like selling silver. Thank you, Louis. That's my goal, my friend. This is all. I mean, we all make money here. You guys know that. But we care about you guys, and we give you 100% every day. So I love what I'm doing, teaching and make everyone make money. I like selling silver at 34, looking to the downside. And we are bearish gold and silver in the 1 hour and the 4 hour. And you, this is what we see in gold. Somebody asking me, we got around 10 more minutes. And you know what? We are better than 95% of the people in what we do. So we love what we do. Right here, we don't feel competition by anybody. But we are very loyal to our clients. And we're proud of that. So that's what we do with Elliott Wave Forecast. We like selling gold. This is the 4 hour chart. 1, 2, 3, 4, 5. We like selling the 3 weeks back around the 618. which is 1727. Yeah, we have a class. Is is right there on the servers, right here. That is around 18 hours yearly of Elliott Wave principle, the new one, not the old one, and you can buy it right there. It's very cheap. It's 18 hours of class. You don't need to read a book or nothing. Watch this class 5 times. You're gonna unsubscribe to Elliott Wave Forecast, and in a year you're gonna be very good. Guarantee you that. If not, I refund your money. So this is the class for anybody. And yeah, we can send. Let's see. We can set the videos. You guys need to send a request of the recording to the email that we provided, support@elliottwaveforecast.com, and we're gonna send you the video later on. All right. So that's the review. We do this to our clients honestly every day. We do this to our clients every day of this war, twice a day. Our clients, they are in the right. We don't have nobody selling the euro. We don't have nobody picking the top of the yen. We are in the right side of the market 85, 90% of the time. And we are proud of that. They make money. And now with the FSCN promotion, uh, with the FSCN promotion, uh, is very good for you guys, because you guys can save a lot of money and save it there for and take it for free. If anybody is a FSCN account holder, you guys you guys can get it also. Just follow the steps. It's a very simple step right there, and you click here, you create the account, sign out, open the FSCN, or transfer the money or within the FSCN account that you guys have already. And right there, FSCN, if you meet the minimum condition of 4 or 8 standard lot in the month, yeah, Ben is very good, Naomi, in Bad Bay FX. I was talking over the phone with him last night for about an hour. I know that he's pretty good. Uh, so we don't. It's a win-win situation for everyone right here. All right. So they're asking me any question that you guys have. They're asking me about the pound yen. We don't follow the pair. We used to cover it. We cover 3 yen pairs, but I can give you my opinion for you right there in the second. I think it's the same of every yen pair. I mean, maybe one more cycle, and that's it. I mean, I'm sorry, I don't have a great feeling out it, but it's the same. This is the same market everywhere, guys. 1, 2, 3, 4, 5. Most likely it's gonna do. You see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. One more high and should top biome right there. All right. So anybody that is not a member of Elliott Wave Forecast, like I say, that wanna become one, you guys can do it two ways. Either straight up membership, or you guys can take the 7-day trial, which is free, and then get the service for free using FSCN. All right. Remember, it's from the non-US clients, unfortunately. Any other question, guys? We got 5 more minutes. Any other question? We don't follow that one too. If you like it, Karim, uh, if you are already a client of FSCN, uh, it's easy for you. Follow the step. Go to the promotion page, sign out with us, open it. This is, let me explain it to you guys how it looks like. If you are a client of FSCN, if I have to extend it, don't worry, I extend it past the 11:30. If you are a client of FSCN and you want to take it, all you have to do is open an account, the 7-day trial with us, you open an account. You open a secondary account with FSCN through Bay FX. And then when that second account is ready, they're gonna transfer your fund for your primary account to your second account. That's it, simple. You understand it? You understand it, Locus? It's very simple. It's very simple. That's the easiest one because you already and have an account with FSCN. That's the easy one. I recommend that all you guys. Of course, I want to sell the service. Don't get me wrong. I want to sell the service. Don't get me wrong. If you guys become members, you guys, uh, you guys gonna get to know each of the Elliott Wave team. We are very down to the air guys, very friendly. You guys can talk to us 24 hours a day. There's always gonna be someone for you guys there. It become personal with us. So now it's a win-win deal. Now let me go about some question here. Yeah, thank you for that comment. I don't deny that I'm selling the service. And we're doing it because we wanna create accounts with FSCN and Bay FX. That's what we're doing this for free. Our client knew about it. But we do this every day. Now, the Euro Sweeps, let me go over some question, guys. Everything is known about selling. Let me go, the Euro Sweeps, let me see, because we used to carry that pair after it's been manipulated. It's no need to waste your energy in that. Yeah, if you have an account, no, you're only gonna have one account. Oh my gosh, a lot of questions. Don't worry, I stand here. Listen, guys, if you are Andrew, if you have an FSCN account already, this is all you have to do. You open a new account. When you have a new account with them, they're gonna transfer the money from your old account to the new account. That takes hours. That's it. The only thing why you have to open a new account is because they have to track in order to give you guys the credit for your membership. They need to track your operation through the link that is the promotion with Elliott Wave Forecast. You understand it now? That's why. It don't take that much. We got clients already that they're doing. We're gonna send a video on social media and to all you guys explaining how to do it. But of course, the FSCN guys, they got, a step ahead of the rest of the guys. But anyway, we give you guys a 7 days free trials for you guys to help you guys and not charge you guys with the transition of switching from one way to the other. You know what I mean? In case that someone have to switch, brokers. Now the euro switch is manipulated. It got 1, 2, 3, 4, and it looks like a 5 swing right here. I mean, look what one of the clients say over here. I mean, if you don't want to take the promotion with FSCN, you can go straight in and you don't switch broker. It's up to you. We're giving you guys the win-win. If you want to win, go straight with Elliott Wave Forecast. Take the 7-day trials for free or take the 14-day trial for $9.99. Both are there. 7 days, you can take it for free, or $9.99 for 14 days. It's up to you. You can do it whatever you want. But you're going to get this every day. That's what I want to let you know. So, I believe, I would rather trade another instrument that trading the Swiss, the Euro Swiss, but I think it's bullish against this area, 120. The Swiss National Bank is telling you that, so that's what I think about the Swiss. Let me see. I don't want to miss any question. Veronica, that's my opinion there. Long-term oil, I believe that oil is going to drop, but it can extend a little bit higher because it's going to go, oil is going to follow the whole market. And that if the market is bullish for one more swing to the outside, that goes oil there. And then it's going to correct. Listen, guys, this is all about cycles. The market is in the bullish cycle. Every one of them is bullish risk cycle from 2009. Most of them, they are showing 9 swings from 2009. And 5 swings from 2009. Our best cycle reading is that a deep correction is going to happen in the market that is going to correct most of the indices from 2011 and another rally before finishing the super cycle from 2009. All right? Now they're asking me about the long-term cycle in the euro dollar. We've been telling you clients that our system is still, thank you, Veronica. Become a member. Guys, you made the money. We got members making a ton of money. This is the euro on the weekly. We're showing the members 2 counts. One of them, the low, this B is already in place. The other one is calling the extension lower. All right? So our system is saying that it's going to go to 140, 143, and from there, let's see what happens. All right? Let me see what else. I don't miss nothing. If we do the French 10 years, right? No. We're covering right now 25 instruments. We're planning during the first quarter of this year when we finish this promotion with FSCN, that honestly, guys, it takes a lot of energy out of us. Even though we have the help from Bad Bay FX, which works together also with FSCN, and they are great with the customer service. But honestly, we got a lot of work, and after that, we're planning to add around 7 to 8 new instruments to the service. We don't do the French, but we do the German, and we're planning to add another. No more Forex pairs. We're planning to add worldwide instruments like bonds, futures, things like that we do. I agree with you, Luis. Okay. Okay, what else? What else? Any other question, guys? And listen, guys, I always told this to the clients. It's very simple. 140 FSCN is paying for your service if you subscribe and you make the minimum amount of trading. You're gonna make that money back pretty fast. So this was, I mean, with, we believe that it's a great opportunity for all you guys. We thank you, all you guys, for being here today. A very huge response that we got within the English side. We're gonna do it in Spanish for those that speak Spanish. We got an Spanish division also with the same offer, and we're gonna do it the regular seminar that we do in Spanish at 1:30. So if anybody wanna hear in Spanish, 1:30, a link is all around the place. And we thank you, all you guys. Any question, any request for the recording, any question, send us an email. Let me type the email here. I know it's much better. Let me type the email. Listen, guys, about the brokers, if you don't like FSCN, do the promotion, or send Karit, send us a request saying, I am Karit, I don't like FSCN. And Bad Bay FX, they work with different brokers. They probably can have something for you right there. We are willing to work for everyone. We like FSCN. They are very supporting of us. We do a lot of educational videos for them. So we would like FSCN. If you don't like FSCN, you got two choices. Either you subscribe, it's straightforward, you pay with your membership, send us an email, or send an email and we forward to Bad Bay FX to see what they can do for you. All right? But we would like to see some of you guys around. Send us an email to this email. I'm going to type it here. It's better than right there on the web. Let's put the Gmail, which is more likable for you guys. You guys can send us an email right there at elliottforecast@gmail.com. Daoud, please send a tweet saying that anybody that has a question, want the recording, to send us a request. And that's what we think. The last question is about the dollar CAD, which we believe you have to be bearish the CAD. You have to be bearish the CAD. Thank you, Tim. Because if you are bullish the dollar, you have to be bearish the CAD. And sorry, if you are bullish the S&P, you gotta be bearish the CAD. Now, long term on the CAD, what I did over here. 1 second. I did something here. Okay, got it now. Long term, and we're talking long term CAD. I believe, looking at the RSI, that it did a three-way move over here. You see, no divergency. And we believe that we are in the middle of the first cycle from the top. Still, we are expecting at any moment with the CAD to It's bearish against this low, this high. But we are expecting at any moment a move in the cat like this before continuing lower. Only a taking of this level in our system open a little more outside. The dollar is bearish, guys. Don't get confused. Now, that is gonna do correction? Absolutely. Okay, guys, so leave you guys all there. They're ready, the email with the info. Please, we're waiting. We're waiting for see some of you guys around. And thank you very much, everyone, for being around today. Thank you, guys.